Hey traders, this is Christian from Hertz, CEO of Tribeca Trade Group, with your weekend recap video and look ahead for next week. First things first, happy Father's Day to all the fathers out there. I'm going to start with looking at the major index charts for the week and a couple of things to point out with. So, what do I have here on my charts? I've got, the 50, the 100, the 200-day moving average. I've got volume down here, and I've got fund flows, so inflows and outflows. This kind of really gives a pulse into whether or not investors are going into a particular area or they're pulling money out of funds. And so a couple of things to point out here. Look at the volume in the queues over the last couple weeks, and we see one big day of outflow, and then we actually see some money being put to work in here. So a lot of this volume, and I know people kind of read into this. I think a lot of it is day traders. A lot of day traders, volatility picked up. We just haven't seen a lot of volatility in the overall market. So I think traders really welcome a chance when you've got big swings in different areas of the market to day trade. So I think there was a lot of day trading that happened last week or the last couple of weeks in the queues. We really don't see a lot of outflows besides one particular day. I don't have the RSI on here, but you could see how extended we got above the 50-day moving average. So we were due for a pullback. We got one of these a couple weeks ago, and it got bought pretty quickly. So where are we now, and what am I looking at now? Now we've got a really nice chance, I think, if you hear this all over the place. Oh, geez, if I could only get a dip, if I would buy if there was a dip in the market. Well, you got a pretty nice dip into support, which I think is you're just not going to get too many of these chances. Could it break down further? Of course. And I think you want to be very disciplined, just as you should always be in your trading discipline. Whenever you take a long into something and it starts to break down, you want to get out of it quickly, because really in this game, small losers are fine, big losers are not cool or not good, and we're looking for big winners. So in a area that's been in a big uptrend for a long time, catching it on support is kind of the name of the game, especially when when everybody gets scared. You kind of hear left and right the tech wreck, and it sounds scary, right? I mean, the media tries to make this out more than it is, which is a bit of a overbought pullback. And I personally, I love when this happens. When you've got a very strong area getting a pullback, it's rare. It's rare to be able to get that. So I think if you kind of look, the weekend newsletter that I put together. I talked about a bunch of areas that I think are on my radar for longs. The next area that I'll talk about is semis. We've seen this before in the semiconductor space over the last year. Every time we kind of get into this 50-day moving average, it's been a nice buying opportunity. So kind of to look at the whole sector first and kind of see what it's doing, kind of gives you a sense of, is something breaking down? Is it just a dip into support? Did it get overbought? And then we can kind of look for individual names once we have this kind of setup in mind, which is basically what I'll be doing next week. If we in fact hold this 50-day moving average, notice that the price action didn't even get there to the 50-day moving average, but it just kind of gives you a sense of how overbought we were in this group. I mean, look at how extended it was above the 50-day moving average. So we're kind of sitting in here a bit, and I would call it in digestion zone. So what I really want to see this week is, which we didn't really see other than some really short-term buyers in names like Nvidia. Same thing with AMD, same thing with Micron, which has just seen continuous call buying in. But just looking for some names that are also seeing some call buying. So TER is one name that has been very strong, which we actually saw a buyer in this on Friday. So Teradyne, which has had a little bit more of a slip. So this one, maybe you want to use the 100-day moving average. We did see some put buyers kind of attack this zone back, not last Friday, but the Friday before. So this is an area that I would be watching, and I think is interesting versus this 100-day moving average. If it breaks the 100-day, just like with some of the other charts that we just went through in the Qs SMH. If you break that support, I would say time to abandon. You know, if you've got in, if you're like me and will be getting in to kind of play the dip, that's an area that you want to abandon, especially because we really don't have much support if we break the 100-day moving average down to the 200-day. You know, maybe a little bit of support down here in Teradyne. Um, but other than that, it could be a big move down to the 200-day moving average. So you've got some really defined support. And again, going back to like how really good traders trade is they look for a setup, they look for support, and if something breaks support, you're out quickly, no questions asked. And then you can kind of reassess. So I think that's going on in Teradyne. Just a couple other names to look at. Apple, big sell for the Russell for the not the Russell for the S&P rebalance. Keep in mind last week, which again I've made a lot of attention to because nobody's really talking about it, is there was a big S&P rebalance last week. All of the names in the S&P and in the Qs, they all get reweighted. So there's a lot of flows. Look at the volume on Friday in Apple, and Apple was for sale for the S&P rebalance. So that's now over with. We'll see if Apple can hold this 100-day moving average. A lot of people are looking at Exxon and Chevron. Keep in mind what happens on the S&P rebalance is benchmark indices have to go back to their original benchmark weights. So market cap indices, what generally happens is winners get sold for the week of the S&P rebalance and losers get bought. Take a look at a loser, Exxon. Look at the volume on Friday. That's all the S&P rebalance. I saw a couple notes and people were saying oil's going to go up next week because Exxon went up. Exxon went up, I believe, because of the S&P rebalance. It had to be bought to be weighted back into the correct weight in a lot of the major indices. So I am not buying X. I do think it's interesting that I reclaimed the 200-day moving average. These charts are dividend adjusted, by the way. So I will be watching this name. I do think it's interesting. If it snaps right below the back below the 200-day moving average, you know that it was just basically one day of buying because of the S&P rebalance. So keep an eye on. I definitely will be watching these names. Same thing with Chevron. I think Chevron had to be bought as well for the S&P rebalance, but that's firmly above the 200-day moving average. So regardless of my thoughts, you could respect price and basically go long a couple of these energy names that have now poked their head above the 200-day moving average because you've got that defined support. So this is the most interested I would say I've been in these names. I'm very skeptical of Friday's volume. Because I really believe it was for the S&P rebalance, but nevertheless, let's see if buyers start to come in. It doesn't really matter, if buyers start to buy it at this point forward with that support of the 200-day moving average, it's got a chance. So a couple names to watch in the energy space. I also talked, just to kind of go back to the tech space for a minute, KWEB. I talked about a bullish trade in JD.com last week that I entered into. I have a video about that I shot, I think, on Thursday, I believe, of last week. So you can check my YouTube page out, and that's on there. But taking a look at the whole group, I was long. I got long KWEB on this pullback, and made some nice money. This was the BABA breakout, and I didn't like the price action at all here, and I got out of the position in KWEB. I got out of 85% of my position here, and then I waited one day, and once I saw this slide below, I was able to get out of this clean and free. Very, very nice trade, and I got out of this whole thing, or I wasn't a part of this whole slide. So, but I'm always watching, even though I don't have a position on. I was like, let's see how far this thing can get down to. So 1, 2, 3, 4, 5, 6. Kind of 6 bars down, maybe one hammer bar, and a little bit of support here. So again, to kind of say what I said in the beginning of the video, I really like areas that have been strong. I think this ETF is still up. The China Internet ETF is still up 39% year to date. So I like these pullbacks into support as a good area to possibly go long. So I'm going to be looking as well now that the dust may have settled here a little bit after going from 51 bucks down to 46 and change, almost 40, I guess around 47. Let's see if buyers start to come back into the space. And I would be possibly looking for something to the effect of maybe selling a put spread and buying a call spread. We'll see. I want to see if this, I want a little bit of confirmation first that this 50-day moving average is going to hold. But that's something that I'm certainly watching. What else to kind of go over from our weekend newsletter? Our sector review. Every week I look under the hood to see if sectors are starting to break down or if they're still strong. And what we saw last week was the R word, rotation. And again, going back to the S&P rebalance, this happens. The winners get sold and the losers get bought. So, to the top of the list, and I did warn against this in the previous week. I said I don't like this is my own indicator. It's a momentum indicator, and I didn't like the falling momentum in a lot of groups. So now we're starting to see, and it's been this way for 2 weeks. So these things cycle through. We'll see if we start to get some positive momentum this week. We've got a couple more weeks until the next quarter's earnings cycle starts. So I really want to see if we can get one more push in some of these groups, especially the groups that have pulled back a little bit. So the main takeaway from this is most of these sectors are still, these are all just the S&P sector GICs, how the S&P defines sectors, and there's only one that's below the 50, 100, and 200 day moving average. All the other S&P sectors are now above the 50, the 100, and the 200 day moving average. So while you continue to kind of see people on Twitter talk about how this market's done, or I had somebody tell me this weekend, or I saw a note saying that there was a lot of inflows into equity ETFs. That happens the flows get heightened every quadruple witching. It just happens. I actually pulled up my note from, let's see if I have it, from December, another quadruple witching. So they were making a statement saying that retail investors are buying at the wrong time at the highs. That is completely erroneous. So here's my note from December, one of the two quadruple witchings ago. Look at the inflows that we had. It was $19.6 billion of inflows. That was not the top of the market. So, for someone to kind of look at this 1 week's flows, not actually look to see what ETFs are driving the flows, and make a conclusion about 1 week's flows and completely ignore the market events and make a conclusion that it's the top of the market has got to be one of the stupidest things I've ever heard of. But these guys are on Twitter, so you really have to be cognizant of that. So again, this was from December, $19.6 billion of inflows. That did not signal a top. So I don't think this week's flows of $13.6 billion, where dealers collapse positions because S&P futures and all the index futures expired on Friday morning. I don't think that's it. So what did see inflows this week, by the way? Consumer staples did see inflows. Financials, energy, tech, those saw inflows. Consumer discretionary also saw inflows. What saw outflows? Materials and healthcare. And it's almost, I would call this at this point, liquidation going on in the gold miners. The gold miners tried again to get above the 200-day moving average. They couldn't do it. But look at all the outflows that have been happening here in the GDX ETF. So really, there's been some heavy liquidation. It could be once these sellers are done, maybe it'll flush the gold miners out, and maybe that'll end up being a contrarian buy signal. I would wait for a move back above the 200-day moving average. Same thing with GDXJ. Look at all the red bars here. Again, these are all big outflows, so money leaving this group. There's a couple other groups in materials that saw. This is Gunner. This is you can see that big red bar down there, and you can see the volume. So typically, how it works is dealers, when there's a big trade that happens, what they will do is either create or redeem. And they redeemed based on a big seller. So there was a big seller in this Gunner ETF. This is basically a combination of material stocks and energy stocks in this ETF. But definitely thought that it was interesting that someone kind of threw in the towel here and liquidated their position in GUNR. Another ETF that is not a S&P GIC. That's therefore it's not in this analysis up here. But I still am always looking for areas that are either breaking down or breaking out to 52-week highs. Is metals and mining. So the steel names, if you look at SLX, this is an area of concern, I would say. Breaking below the 200-day moving average, these are steel names. And XME, which is a combination of steel names and mining names, also breaking below the 200-day moving average. Besides that, there's really not many areas. We talked about energy, which has been below, the 50, the 100, and the 200-day moving average. So besides energy, there's not too many global areas that have been breaking down either. It's basically Russia. That's been the biggest name that's been moving down here is Russia. Every other area globally. In fact, if you want to look at, we've been talking about Europe now, which VGK got another big inflow last week, which is the European ETF. I mean, look at all these inflows, money going into Europe, and look at the volume, and the green bars confirm these are inflows going into the fund, actual money or assets going up in the ETF. Same thing in FEZ, FEZ, same thing in EZU, which also saw inflows last week. This group as a whole, so $930 million that went into, sorry, I just want to make that correction here, into the ETF. Note the inflows of the previous week was $1.7 billion. Developed markets continue to see money being put to work. Last week it was VEA, which saw the biggest, I believe it was VEA, saw one of the biggest inflows for this group. That is very similar to the EFA ETF. Same basket. It tracks international developed markets, so mainly Japan and Europe. And then another ETF that caught my attention, probably one of the worst areas economically over the last couple of years is Greece, right? Take a look at the volume in the Greece ETF on Friday. So it made a 52-week high, and really where this is interesting is when you look at a 5-year chart of the Greek ETF, right? I mean, this thing was around $23 a couple of years ago, 2014, and look at this thing base and start to break out and make a 52-week high. So look at the volume confirming the breakout here in Greek ETF. So it's a $9 stock. This is a name I will be looking at to play long in cash. I'm not going to play options with a $9 or $10 stock. There's no need to do it. So I would probably set my stop around maybe the 20-day moving average. Let's see what it looks like over here. Yeah, probably this blue line could be your stop. This is the 20-day exponential moving average on my charts. Besides that, I think we kind of covered everything that I want to cover. Other sectors that made 52-week highs last week, which you didn't really got very little attention last week, was the industrials. Industrials on Thursday. Look at the candle on the industrials chart, 52-week high. It was almost a different sector every day last week. You could see that XLB kind of got squashed a little bit, bearish engulfing candle on a 52-week breakout. So I don't really, that doesn't look too attractive to me. If we go back to the to Bloomberg, where I can pick up the inflows and outflows, you could see that it looks like there was an inflow on Friday, but you could see that there was some outflows right as this thing was trying to break out. Another ETF that looks interesting to me is MOO, MOO. This is the agriculture ETF. And then I think the last one I'll talk about in this video is going to be ITB, the home construction ETF. So I hate to kind of go through this because I go through it a lot, but I see it misquoted on Twitter a lot. XHB it's called the home builders ETF. However, when you look at the components, which a lot of people just fail to do, there's only 28% in the home building ETF. It's mainly it's also a lot of building materials, retail, home furnishings, textiles. So you have to be a little bit careful. If you go to the ITB ETF, it's called home construction, but it actually has 63% of the home builders. So if you really want a pure builders ETF, this is not pure builders because it would be 100%, but I would favor, if you want exposure to the builders and not retail companies that are in the building group, I would favor ITB. So what did this ETF do last week? It made a 52-week high. It kind of came in a little bit. This was a trade that I had on for a while. I talked about this frequently last week because it's been a trade that I've held on to now for a couple months, and it finally broke out to a 52-week high. So I was doing handstands on last week when this thing finally broke out. Is that the right thing? Handstands, backflips? I don't know. So it did come in last week. There was a little bit of weak housing data that came out, both building permits and the other housing data. What is it? Housing starts. I always get the housing starts and the new. Yeah, I think it was housing starts were weak. So we do get more data that comes out this week in terms of existing home sales, and new home sales are out this week. We also get Lennar that reports this week, but we've been seeing nothing but call buying across the board in this group. It was about, I think now 3 weeks ago, where we saw a 2019 call buyer in Lennar. And then last week we saw multiple call buyers or repeat call buyers in Pulte. We also saw a call buyer in Toll. We also saw a call buyer in Lowe's last week, which Lowe's is probably, Lowe's after earnings kind of really got beaten up. But we saw a nice, sharp, aggressive call buyer come into Lowe's. We saw a little bit of call buying in Home Depot. This was another long trade that I was doing backflips over last week when it bounced on the 50-day moving average. Builder, another name that I got long last week, which also saw aggressive call activity. So this area I would keep an eye on, considering the multiple call buyers that we had last week, and also with those events that I described. And I think that's it for my charts. What I will be doing later, strictly for members, members only. Here's my analysis, by the way, on SMH and at KWeb, a little bit more detail in our newsletter of what I've already discussed. But I will be going through. Usually it's 10 to 15 different names that we saw aggressive call activity last week that I'm watching to either start longs in or and I'll be detailing levels to watch. Both support and resistance. So that is for our members. If you want to check that out, you can subscribe. That will be going out a little bit later. It's the 10 to 15 names to watch going into next week. Those are single names, not ETFs. So thanks for watching today's video. And again, happy Father's Day, and enjoy the rest of your weekend. Thank you.